This is Siddharth Alwalia. Welcome to the 100x Entrepreneur Podcast. This episode is brought to you by Prime Venture Partners, an early stage VC fund led by Amit Somani, Shripati Acharya, and Sanjay Swami. Prime is often the first institutional investor in category creating tech startups in fintech, SaaS, healthcare, and education, such as Mygate, Neo, and Reco. To know more about Prime, visit primevp.in. Today I have with me Tej Kapoor, Managing Director and Head of Fosun Capital India. Fosun Capital is an early stage to Series A, Series B venture capital fund with headquarters in China. Tej, welcome to the podcast.
Thank you, Siddharth. Very nice to be here.
Tej, we would love to know more about your journey.
Sure. So to give you a brief background, I've been doing investing in India for more than 10 years. And before that, I was in the US again, doing investments in US. Actually, my real learning ground was at AOL, America Online, which in 2007 to 10, when I was there, was actually like a university. There were many business models that were being launched in AOL, whether it is personals or shopping or classifieds. So it was a great experience for me to be at AOL and learn these different businesses which were just taking off in India. And when I came back to India, it was a very exciting times, although early days of the e-commerce journey and also internet journey in India. India is quite different, as we know now, than it used to be back in 2010. There were very few companies and few entrepreneurs, and as you know, Flipkart is a great story out of that set of founders. And then I worked with Naspers here in India, where we had a bunch of properties that we invested in, including Flipkart, Travel Boutique Online, Gaadi.com. Those were really the setting stone or years for internet in India. It was a great experience for me to work both in operations and investing team. We also launched Traders. I don't know if you remember, but Traders used to be a similar model to ShopClues, and it was growing really fast. I got an opportunity to work in operations as well. So it was a mixed experience of investing in operations at Naspers, and I'm glad to say that at Naspers, the Naspers is able to build some of the large businesses in India, including payments, travel, as you know, with Goibibo and MakeMyTrip acquisition, investment in Flipkart, and also Travel Boutique Online, which is largest, even today, the offline network for travel business. After that, I had experience to work with Daily Mail Group of London, and we were doing more data investments in India. And there was sort of a winter in 2015, and I missed a lot of B2C opportunities. On the hindsight, it's good because I think I avoid making a lot of mistakes because that was a difficult period for B2C. But Daily Mail was a great experience. We had investment in India Today, a group newspaper company. We did tech, real estate tech investments in India in a couple of companies, and also looked at briefly China market, which was just amazing to look into. And after that, I joined Fosun, as you know, and Fosun is a great enterprise, very, very dynamic organization with multiple funds, very fast-paced environment, and it's just been a pleasure to work with Fosun folks. I did my education in Bangalore and my bachelor's, then I went for my MBA to US, and then worked there for about 9 years, and then came back to India. So that's been the journey so far. It's been quite exciting.
So what is Fosun Capital about? Can you tell more details?
Yeah, Fosun Capital is a technology-focused fund of Fosun. As you know, Fosun is a very large enterprise. So RZ Capital focuses purely on tech investments in various series. We do early stage to all the way to IPO. Actually, in our portfolio, we have companies which we have invested or seeded, and we also have large companies like Delhivery and MakeMyTrip. So we covered the whole spectrum in India over the last 2.5 years to 3 years. We have built a portfolio of about 10 companies so far. And we look to further build this portfolio into 20 to 30 companies. And in China, RZ has more than 60 companies that invested in. In US, we have 10. It's a global VC fund. We have offices in US, Israel, China, Southeast Asia, and India. After China, the largest investments have been made in India. So India is becoming second most important market post China for RZ Capital. We have total strength of about 40 to 45 people, which majority are in China, and then US, and then India.
So, what are your ticket sizes in some of the large investments and small investments like Ixigo, Delivery, Kish, then to small investments like Milo, Headphone?
Yeah. So so we have two ticket sizes, or rather, I will divide it into three, a bucket of three. One is seed investments, which are minimum check size of $500K to $1 million, and then we do Series B onwards, which is about close to $5 million to $10 million. And then we do large ticket transactions. So we don't typically come into D or E because in India, as you know, the valuation can end up being expensive. So either we try to come in early or we try to come in late. We do a lot of co-investment with various funds, come together with them. We don't mind having multiple investors in one transaction. For the large ticket transactions, obviously we have to build a lot of thesis around the company and what they're doing, as these also take a lot longer because we want to invest in undisputed market leaders. So Delhivery is an example of that, where they have become one of the unicorn in logistics space, and is growing phenomenally. And I think the next company which would compete with Delhivery will be at least half or 1/4 of their size. In early stage companies, we take bet in smart and also very aggressive founders, and also large markets. So also we have some precedents set from China. For example, if you take the example of Milo, we have investment in Baby Tree. Credly, we have Day HR in China, which has done very well. Credly is trying to build the largest HR platform for the SMEs. And similarly, we have done Perk Finance, which is also early stage deal, which is very similar to our investment in one of our companies in China called Quant Group. So we learn from China and try to find founders here who are doing similar models, and in large markets we want to come in early. Headphone is a great example of pure tech company, which have content creators on one side and consumption on the other side. On the content creation side, we believe that it's not like one shirt fit all sort of a model. You have to go vernacular. As you know, India is mix of many countries together. It's not one country which can serve only through English or through Hindi. So what Headphone is trying to do is build content for different geographies and getting right kind of people to come and present themselves on that. So we like to do tech plays, marketplaces, where scalability can be seen in the long run, and also in the short run can add value for consumers.
What are the markets you are currently focused in 2019, 2020?
So I think 2019-20 we will be focusing on a lot on, again, fintech, logistics, which happen to be our core strength areas as well in India, and we have done well in those investment, travel, and also on the consumer internet side, any kind of product marketplaces, which will be our focus. We will definitely do e-commerce, because I think e-commerce is still very small in India. If you look at the size of e-commerce, is only 24 to 30 billion in India, and if you look at just one company in China called PDD, it does 64 billion of GMV. So I don't think that the e-commerce journey is finished. I think e-commerce is just getting started in India, while you will have, and India is running on parallel trains. What I mean by that is that the organized retail is growing at the same time. The modern e-commerce is growing at the same time. Social commerce is building at the same time. Influencer-led commerce is building. So we have different models which are getting generated in India, and India does not just follow the path of linear movement. It follows the path of where different models can come together. So we're quite excited about e-commerce and the growth in e-commerce. And if there's growth in e-commerce, then automatically a lot of businesses do build up behind e-commerce, as we know. Payments. So we are taking bet on payments as well. We'll take bet on further into logistics as well. So everything which is around the usable data or internet use or mobile first kind of companies will go after them. And we will selectively do content like headphone sort of companies, because content monetization, as we know, is still some time for people to. Obviously there's a lot of growth in terms of MAU and DAU, but monetization is still a challenge. So but we'll take very selective bets in content.
So when you are evaluating early stage companies, seed stage companies, what are the parameters you are looking at?
Yeah, so for seed stage, it's very important that you have a disruptive business model. Second, you have a very aggressive CEOs who, because making companies is very hard in India, and you need to back founders who have prior experience or are young and want to kind of disrupt the models. We also look at co-founding team. We don't typically invest in a one founder company, because I think it takes a lot of effort to build the company. And we look at large markets, large sectors rather. Obviously India is a large market, but within India, what are some of the large sectors that we identify, which we can look at and which have high growth potential. So those are the key elements. And obviously product market fit. We help the companies to get there. Also identify how they can grow 10x rather than 1x. So just have ecosystem around it. Also, we encourage a lot of them to travel to China to understand from Chinese market, because in a way India is following I think more closely the Chinese market than the US market, in terms of business models, for sure. So we bring them, we do road shows for them, we help them in hiring. So we want to work with CEOs who can look beyond what you and I see, and try to bring in immense value to the consumer.
In your life, in the first half, I would say typically, you have been part of AOL and Naspers. Especially in Naspers, you have done large ticket sizes, approximately 100 million kind of sizes. What made you shift to early stage investment?
Yeah, I think both have their own charm of doing investments. Obviously Naspers will take few calls in a year, but large ticket calls. While at Tej Capital, we can do early stage. I think it's a different and an exciting journey with early stage, because you have to use more brain power and also go deeper into a sector to understand what they're building. Also, I think there are small successes with the early stage. With the large company, that you are putting money for growth capital, and largely the product market fit is there, and the management team is already proven the model. But in early stage, the journey really is more tight with the founder, and you are feeling his pain. At the same time, you're able to guide him a lot more, and able to pass him through different hurdles, because I think no startup and any CEO you talk to them, it's not a very easy journey. You will have a great day and a bad day, and a and not so easy to raise money. So with early stage, you get this excitement of having wins, and when you have wins, you celebrate together and you feel accomplished. So I think early stage is more exciting, definitely a lot more challenging and a lot more hard work, because and also I think you can add a value as an investor more in early stage, because the CEOs are receptive to your ideas. They are happy to listen to you. You are their sounding board. While in large scale companies, most of the CEOs have their own views, and by the time they have found their niche, so it was great experience in both sides. But I enjoy, I think, early stage more, just because you have so many balls to toss, and and the exposure you get and the smart entrepreneurs that you meet are just a lot. And I think the things that changed since I was talking about 2010 is you see a lot more smarter people coming into market with prior experience in large companies, trying to build something new. So it's super exciting to have that journey with them and see them grow.
What we have observed in the last 5-6 years, typically the early stage consumer companies who have succeeded are the founders who have good storytelling capabilities, those that can raise subsequent rounds of capital.
Yeah.
Is it true that that's the only thing that counts?
No, I think that is one of the most important thing. Maybe not the only thing, but smart CEO is known by his fundraising capability. There's no doubt about it, and the success they have in storytelling, and also backed by the numbers they can deliver. So I think storytelling can only take you so far. After that, you have to prove your numbers, because when you go to the storytelling is important in earlier, when you're doing seed A, even B, but post that, people start, especially the private equity firms, when they come in, they start looking at numbers much deeper. They do far more diligence, and they actually are looking at the conversion, which is really happening on the ground. So when somebody's putting 30, 35 million, 40 million, then obviously they are looking at that that level of comfort. So I think it is in a co-founding team, it is important that you have one person who has a voice to the investors, and who has capability of having that persona capability to impress investors. That is definitely required, and I think you cannot discount fundraising capability of entrepreneurs. So that's another one of the things we look at. Can this person build a large enough company, right? Post, like I said, post Series A, B, you will have to really deliver. I've seen many companies who have raised a lot of money, and then post that, they were not able to deliver the numbers on ground, and then they never became unicorns, or never could leapfrog to the next level. So storytelling only takes you so far.
What about those founders in India who are good techies or good in execution but don't have storytelling skills? Should they start building lifestyle businesses?
No, I think building a company, you need to see all aspects. And I think the company where you have a very good techie, it's the most important thing, because we do tech businesses. But if you feel, and you are a CEO who has built a solid product and don't have ability to sell it, then get somebody. I think we all have our strengths and weaknesses. I might not be good at one thing, but I'm certainly good at coding, right? So if you have to the people who know how to build large companies, know where their gaps are, and they what is called self-actualization and understanding oneself, then they can obviously go out and say, I want to hire people. I think you just mentioned what are the other things where what will make a great company, and I think the one other factor is other than fundraising is capability to hire good team. And some CEOs are great at hiring great talent, keeping them motivated, earning that respect from their team, and some are not. So while you can be good techie, you know that I'm not a great HR person. You can never be, two things. Maybe you're great at 5 things, but not beyond that. So you plug in the gap, right? So I think that is very essential if you are going to build a very massive, large scale company. I think Vijay is a great example of that. Vijay Shekhar Sharma, he's hired some of the people I respect in kind of investment community to come and help him, join him as CFO, and were able to drive the business and do the fundraise by themselves. Again, Sahil from Delhivery is another example where he had a large co-founding team, and on top of it, he was able to plug in, some really, really good people who were able to, even if Sahil is not in the room, take good decisions. And that's what a solid founder and CEO needs to do.
What were the valuations of Delivery and Ixigo when you entered, and what are their valuations now?
So I won't be able to disclose the numbers, as both are, private held companies right now.
But if you can share what in terms of X they have grown.
Yeah. So both have. Ixigo has grown massively on trains since the time we have come. I think it was like a rebirth of the company, and their value towards the train audience is just immense. They are doing about 30 million MAUs and 3 million DAUs with a marketing burn which is next to nothing. Um, they were able to almost 30x their traffic. And I think one thing about product businesses is that once you have got the product right, I think you don't have to spend a lot of money to make the product work. And that's exactly what Ixigo has been able to do, particularly on the train offerings where people just swear by Ixigo app. And also at the same time, they were able to get themselves profitable because they were able to acquire good traffic who they can convert into air or hotel business, and able to generate money. So a lot of investors used to question me, will Ixigo be able to make money? And the answer is yes, they are now at a almost $30 million run rate. So they have really proven that they can convert their traffic into revenue. Delivery is another example of a great company which keeps growing 40-50% year on year on large base, and also keep serving its clients. They have now diversified their product offerings, and they are again at a path of maybe growing more than 50%. So that's a phenomenal growth for a company at that scale. I think they have rewritten the rules of how logistics is done in India. They actually are data driven company, and most of the decisions are done through data, and they have built an immense network which is a huge moat for them. And nobody else could, if somebody wants to create, they'll have to spend a lot of money to do that. So they are a very, very well positioned company in logistics business, and again on back of a solid team.
What were your key investments that you led at Naspers?
So Naspers, obviously, we were, first of all, I think before making investments, when we came to India, it was early in the day, and we were trying to build thesis. So there were a lot of things we did, and Ashish was driving Goibibo, as you know, and he's a great guy to launch several products. So clearly, travel as a segment came out, which has a high potential, high growth, and Goibibo was a product of that. Then second thing, we looked at payments because PayU was very big in some of the other geographies for Naspers. And Nitin Gupta actually came to sell his or to fundraise for his company, and we identified Nitin as a great talent, and he, along with Shalaz Nag, started PayU, which became into a multi-billion-dollar company. As you know, once I think Naspers knew that e-commerce is working, and they always are focused on investing in number one player, or a player which can become number one. So obviously Flipkart came up, and which was a great investment for Naspers. And then after that, OLX was also launched in India because they had OLX in various other geographies. So Naspers is very, very sharp in terms of identifying the gaps, and then either building the companies out or to invest into companies. And it really turned out that they have number one travel asset, with MakeMyTrip. Obviously now they have sold their stake to C-Trip. And PayU still continues to grow. Great leadership team, and a lot of new fintech companies are actually ex team members of PayU. And as you know, Flipkart is obviously done phenomenally well for Naspers. And OLX keeps on growing in classified. So overall strategy really worked out in terms of capturing. And also Naspers was one of the early entrants into India. Because when they started, it was really Times Group, Naspers, and obviously InfoEdge. There were not many large companies in 2000 and 9, 10. These and Naspers had a, I would say, head start over a lot of other investors. Or obviously, one more investment was Redbus, which did really well for them. So yeah, overall, it was a great experience for me particularly, and also for Naspers to come and capture India market.
What is your learning working with some of the great founders like Alok from Ixigo, Sahil from Delhivery, and your previous stint at Naspers like Ashish from Ibibo, you mentioned?
Yeah. So, I think my, my learning is that you look at all these founders, and one thing you will appreciate, including Ashish, Sahil, Alok, even Pushkar from Let's Transport, who is a recent investment in another logistics investment. It's that number one, they are very aggressive in their thinking and also in their execution capability. Number two, I think they're very hardworking. You can just an example. I introduced Pushkar to one investor like at 5 p.m. and the next call I make to him in the morning, and I said, "Where are you?" And he was at that investor's meeting room. So it's just the tenacity of sort of taking the opportunity. And that investor, by the way, did invest in Let's Transport. So so these guys can get on a flight any time of the day or night, or can be anywhere. Just the aggression is and very necessary. Also, they're full of energy. Then which actually is kind of infused in other team members. Also, they all are good sort of listeners, and play a very balanced role to manage their board, customers, etc. And the respect they get from team is immense. So they are able to earn that respect from your peer group, etc. Similarly, we have another company called Kish. There's the same thing. Ranveer and Krishnan both have a very, very different personality. Ranveer is very aggressive. Kish is and Krishnan is far more focused on the operations. But both of them combined together is just a phenomenal, phenomenal team. So all of them have built a solid team around them. People who have been, will not switch for money. Will really respect the founder. Ashish, is with Ashish. I think on top of all of this, he's a great product guy. Ashish, while building Goibibo, I still remember he used to count on his fingers, the site load time, and if it was more than 3 seconds, he would, really call up the, the product guy and say, what the hell is going on, So his focus on product and his vision to kind of see the product, really serve the consumer in the best possible ways next to nobody, And again, Ashish is kind of a person who can work, every day for 18, 19 hours, and he still is like that. He's doing his new venture. So that all put together just sets you apart. While others are sleeping, you are at work, and not relentless effort to just keep going, regardless what, obviously Alok has gone through many cycles, and he's just his capability to turn around stuff is just amazing. He's a lot of respect for him too. There were many times when Ixigo was facing challenging situations, and he has every time come out of it as a winner.
What are some of your learnings from China? Because since Fosun headquarters is in China, what kind of mandates they have to invest in India?
Yeah, China is a different. So I don't think India and China culturally are very similar. I think the people think very similar, but I don't think India and China in terms of scale are way apart. China is far ahead of us, in GDP per capita, in terms of consumer internet speed, in terms of usage of data, in terms of people's sort of understanding of products. So China is just a country which is on steroids when it comes to internet, right? And the market is very, very deep. There are 400 million people who buy products in China compared to like maybe 80 million in India now. There people don't talk in MAUs, they talk in DAUs. And everybody lives their life on the cell phone from morning till evening, whether it is, ordering food to cab to, anything. It's really, really on the internet. So for anybody who's in my business, it's just an amazing, pleasure to go to China and just see these different models. And also, like I said, the capacity of people to spend money is much, much higher. Just one example is Luckin Coffee, which became a 2 billion brand in less than 2 years, where they just started in a very simple idea of, when 4 people are in a conference room, they need a coffee. So instead of getting up, why can't we just deliver it to the conference room? And that they were able to do very efficiently, and just people pick the products very fast. So I think the future of internet in India is definitely going to be like China, because people will start. We have already seen with Jio, the speeds are very good. I was in rural areas, in middle of Madhya Pradesh, and I was able to get 4G. So I think the data consumption on the content side has started. I think that need to convert into product orders, and then we will see the same massive growth. So as a VC, I'm super excited about India market. This is the time to actually, the next 10 years are going to be far, far better than the previous 10 years. This is a real time to invest. There are, the market is getting deeper by the day. The entrepreneurs are getting smarter. Now we also have a chain of companies that have got built, and people are coming out of that, so they already have learnings, so they will not make the same mistake again. So very different markets, but when a Chinese come to India, they see amazing opportunities. Similarly, when I go to Africa, I see similar opportunities, because Africa is probably 15 years behind us. So the enthusiasm from Chinese investors is a lot. They want to learn, they want to understand, they want to invest. So India has unique advantage of having both Chinese investors as well as American investors. So great time to be an entrepreneur as well as an investor in India.
You are deeply invested in content spaces in early stages. How do you think these startups will monetize in the next 2-3 years?
Yeah, so we don't have too many content companies. We have one or two, and so like I was saying earlier, I think content you need to build for India is to go deeper. So I'll just give you my example from newspaper point of view. So Amar Ujala still makes a lot of money, right? It is very specific, UP market which it captures and does content for that, and it sells. Similarly, if you look at Aaj Tak as a Hindi news, TV channel, it makes a lot of money as compared to India Today, English channel. So I think you have to go deeper and build content in vernacular languages and then target that audience. Then the local, the real market lies when you can excite the local people who spend in a particular state rather than the whole country, because they want ROI. And how you drive ROI, because content need to monetize through advertisers, or they can do subscription model, but that's really for New York Times. But if you are trying to cover a large massive market, then you need to go deeper into build these content which advertiser will say, okay, I can target Chennai and Chennai users, and this app allows me to really build content for that. So headphone is exactly what they're trying to do. They're going to go deeper and deeper into each and every geography, and then almost like micro sites out of each and every state, and then the advertiser, local jewelry shop, auto companies, dealerships will say, okay, I don't have to bombard the market, because I don't really want a user from New Delhi, and I'm just focused, because there are obviously the mega brands, Coke and etc., which look to do brand advertising, but there are the real market lies between in the local play, and that's where you need to build products for them so they can then start monetizing. So that's our strategy. with the content companies to really go deeper into vernacular and then monetize.
What kind of new e-commerce and transportation companies will you see coming in the next 2-3 years?
So e-commerce is already, as you know, is happening because you have seen, the second generation of e-commerce like Meesho, Shop 101. I would put in the second, which were using the WhatsApp as social selling platform to sell to users. Now you have got third generation company which are like SimSim, Bulbul, and then there are cross-border companies which are like Club Factory, Shein. So these are three different segments, and these three segments will keep on building their e-commerce offerings. And then obviously you've got the Amazon and Flipkart. So the question is that everybody has a different way of acquiring a customer and then offering customer what they need. And then obviously, and then the great news is the Snapdeal is coming back, with their offering as well. So I think it's back of so all these e-commerce, players, you will have, perhaps one category winner and then the other one, which, you'll have two players in each categories. But could Meesho become $1 billion company? Probably can, right? Could some of these new social shopping can also become $1 billion companies? And you have seen in the previous also times, Snapdeal, ShopClues, obviously Amazon and Flipkart became, actually $1 billion, all were unicorns, right? So I think it is all were and are unicorns now, actually, except, maybe ShopClues is having some trouble. So you see that each category will have a winner, right? And there's enough audience for each category. TikTok is a pivotal movement for India because it has now made people to self-personify themselves and become, sellers. And these are the key opinion leaders who will go into these platforms and sell stuff. So it is like Home Shop 18, if you remember back in the day, is a new avatar of Home Shop 18.
How do you evaluate fintech investments in India, and what's the next gen of fintech coming in India?
Yeah, so there are many reports, and you can see that the banks can't really solve all the problems for Indians, and the banks have they have different cost structures compared to what is fintech is basically providing financial services with technology layer, right? And doing it more efficiently and cost constructive way. Now because any large organization like whether ICICI, IDBI, they have to follow a lot of norms which are complied by RBI. Now some of these fintech companies can, they have to follow norms, but at the same time they have more flexibility to experiment, and I think the government has been very supportive to them. So fintech has many facets, sort of like, you've got payments, you've got lending, you've got wealth management, you've got rural financing, you've got commercial financing. So it's like nothing new. Like delivering food is not a new thing. Everybody used to do that, but Swiggy made it more efficient. Similarly, Uber made booking a car more efficient. So similarly, the fintech companies are trying to offer the same product but in a more efficient manner. Also, they're launching new products, like new to credit market, and India, as you know, is a very young country. 70% population is below 35. So they have a different need. Millennials have a different need. A loan guy who seeks a loan has a different need. A person in college has a different need. A person working in a blue collar job has a different need. But all of them need to use financial products. So you can there is no one winner take all in fintech, right? Whether it's payment space, whether it is, SMEs have a different need. So fintech, that's why it's so exciting. Also, UPI has made a huge difference in payment space. Actually, we have leapfrogged China in one area, that's in UPI, because we were able to get all the 21 banks together to work with each other and make all payments, almost frictionless and also the cheapest way possible. So there's a lot of credit to be gone to the UPI. On top of it, there are many different companies you can build. So I think there can be at least 10 to 15 billion dollar companies in India in the payment and in the fintech space, in different categories. because all of us, as we grow, we have different financial needs, and that need cannot be fulfilled by individual bank, because bank primary business is to take the deposits and lend the money, but on top of it there are different layers that you need to build which make their job easy. It is not eliminating the bank. I'm not saying that you have to eliminate the bank. You work with the banks to offer products and cover people which are typically a bank cannot do with their infrastructure. You provide insurance to people at the retail level, maybe to the people who are self-employed. So fintech is super exciting area in India, and we are again huge companies will be built out of India. Given the tech stack we have and the UPI stack, if you club them together, the proposition is really good.
In the next 6 to 12 months, are you going to invest more in seed companies or Series A companies?
We'll do mix of both, not only Series A but Series B. So we'll do a 50-50 sort of a thing, and sort of a split, basically depending on opportunities that we have. We're value investors, so we are not definitely kind of, investor who would just put money for the sake of putting money. We also think how we can add value beyond money. So given that, I think our focus is going to be, ensuring that we have enough mix on both sides.
Coming to a more personal side of your stage, what does your daily routine look like?
Yeah, so I in Chinese company, the other thing is you work very hard. You have to, put a lot of hours. So we have, obviously on the post management side, a lot of old companies to, take care of and make sure they are adequately, given our time and help them out. At the same time, hunt for new companies. So it is by no means an easy job, and competition is high. There are a lot of new funds which are there. So one aspect is just to make sure that happens. But I, in my daily routine, make sure that at least there is 1 hour of some sort of exercise that I can do, other than spending time with family, etc. Because it is important to make sure that when you work out, you burn a lot of good energy, and you also help you to take your mind off from things you have been doing during the day. So I'm also a big fan of CureFit, so I go there. It excites me to be with millennials and do exercises, and the classroom setting. I think Mukesh has done a brilliant job in building that company. And then when you get time, obviously read books, take some vacations, which is very essential. And I'll also have a social circle and friends. They're all very important. Obviously we all live a very fast-paced life, but at times it's important that you take a break, go off for, go to the hills. I like to go to hills a lot, because that's very close to nature. Living in Gurgaon or Bangalore, you're always in this concrete mess. So you need to step out and take a break.
What do you read on a daily basis?
Yeah, so I'm definitely need to read startup blogs and also Economic Times. Those are two things. Economic Times in the morning is my almost daily reading habit. I'm also a subscriber to Economist. So talking about podcast, I download their magazine every week and listen to it. Also, I watch Netflix on the entertainment side. And I also read, obviously books which are sort of inspiring, whether it is investing related books, like, the Sapient series. The new book that they have come out with is brilliant, 21 Challenges for 21st Economy. So something which is, which is sort of gets your mind thinking to other than investing as well. That's also very interesting. Like, for example, there are a few books which are by my bedside, whichever I get my hands on. Obviously, 0 to 1, great book. And these are typical VC books, like Airbnb story. It's a phenomenal book, how these guys build the companies. It just helps me in my job, as well as takes my mind off. So these are sort of things I keep reading.
As a final conclusion to our podcast, what 3 advices would you like to share with young founders to deliver excellence in their business?
Yeah, so I think 3 advice is that, stay number one is stay honest to your product, because ultimately that's your test. You could there are many people now in India who could, for a good founding team, put money, right, and give them some capital, but your product should speak to you for yourself. If your product cannot deliver, it's going to, one day or the other collapse. And second thing is, be patient. It's not that success is easy. So even I know many investors who passed on Misho, many investors who passed on Zomato, in the early days. So there's always somebody who will invest into you. You just have to be patient. At the same time, keep making progress. Third is, hire quality people, even if it takes, money, if it takes some of your equity, because if you can hire a person who can help you, make your company grow 10x faster, they will repay for that. So, I think that's very, very important, that you build a very solid team around you, because that's really going to define the company you're building.
Thank you so much, Tej. It was wonderful to speak with you.
Thank you. My pleasure.